Most commercial real estate investors lose millions of dollars every single year or even month by not knowing to underwrite a deal correctly. Heck, even agents do this wrong every single day, which is costing you the best deals, making a lot of people buy the wrong deals, and so much more. I'm gonna break down for you to underwrite a deal like a pro. My team's done $1.6 billion in transactions over the past few years. I've done deals personally for over 20 plus million dollar complexes for underwriting the best transactions. And I'm going to show you exactly step by step what most people get wrong, how to find the right deals, and get a home run almost every single time moving forward. Hey, my name is Jordan Tiber. I'm the founder of Elite Real Estate Group, again, $1.6 billion transactions with my team for the past few years. And I see commercial deals in Austin, Texas, and beyond every single day. And even the commercial brokers and investors get this wrong. So you want to pay close attention. In the first part, I'm going to kind of break down for you like what to do for underwriting, what to look for, what matters, what does not matter. And then I'm going to give you a live look on a random deal we find here in Austin, Texas to show you exactly the thought process behind it, how to underwrite a deal on a real actual transaction or real piece of property or asset. So first things first, when you're underwriting deals, a big common thing I see done incorrectly all the time, which really fudges a lot of numbers and makes it super impossible to know if it's good or not, is a lot of people will use gross rental income as their NOI, which is so off. Because NOI, if you watch my last video up above, all it's about is breaking down what the net operating income. And if my deal does not show me that, I'm in for a huge, huge headache. But there are a lot of things that are hidden when it comes to this. So one, what we're looking for is going to be NOI. And to find NOI, you gotta know our expenses, you gotta know our gross income, and really do all kind of our entitlements. So we understand what's actually happening. And I see this happen so often that even after knowing you want to find out or NOI or expenses and so forth, there are times when we're looking at our gross income and it does not match up correctly. So when we're doing this deep dive and actually looking at property, especially for me, we do all forms of real estate from obviously commercial, luxury, single family, land, and in between. My favorite asset classes of commercial real estate are complexes, apartment complexes, because y'all need homes. They're one of the most stable places out there. Storage units are good right now. RV parks are good most times. They say before a crash or during a crash, you normally see RV parks kind of go away because people can afford to just travel to the United States in an RV park. Now, this is a unique case where people can't afford homes or housing. They may actually live in RV parks. RV parks could be stable still. That is an opportunity for some parts of America. Mobile home parks, kind of similar to RV parks, are also pretty stable a lot of times as well. And like industrial, commercial real estate, strip malls, and so forth are pretty popular as well too. But I'm gonna break down mostly, rental income. So those four main asset classes. And when we look at NOI, expenses, gross income, some agents will hide numbers. So when you're looking at gross income, we want to make sure we're also looking at on top of this, it's not just what they tell you is on there. If it's a complex or if it is a storage unit, I want to see the applications. I want to know what's actually happening. What does the application say? I want to know the leases. Because this allows me to see, okay, the application is this, the lease is this. I know they actually add up now. Because sometimes you see them charging people an extra $100, $200 on paper for Wi-Fi or miscellaneous fees that actually aren't actually on the lease itself or the application. So they don't match up. So you say, okay, they pay $1,000 a month But on this report, it says 1.1K a month. That tells me the big red flag. And that also greatly affects our NOI. If it's 100 units times $100, that is a lot. The 10K difference is a big part of NOI. And of course, the units itself. I want to see the units. This is not really gross income, obviously, because the units don't play a big role. But when I'm looking at the find my true gross income, if I'm doing an apartment complex and they tell me I can see certain floor plans and not all the units, well, I'm gonna put my contract. I'm gonna see every single unit, even if it's 1,000 units in them, because I don't want to have squatters in there or have some unit that is full of bugs and so forth and copy more money or broken down because they don't want to disclose that to me. Or sometimes on the lease as well, for the gross income, the property manager could be in there and they are getting half off or maybe all the way off if they're like really managing the whole place, having a free unit. And once you take over the common complex, you'll now have to honor that agreement until it ends. So all these things add up to this. Also, another one that most people never account for when underwriting a deal is going to be or build out. And build out in this example is like future costs. If I know I'm going to spend $100,000 to add an extra storage unit, or I'm going to add an extra 5K per unit times 100, I want to make sure I know these numbers there. That allows me to also add in these examples to my NOI, to my whole time breakdown. So when you're looking at actually doing a underwriting and deal, you want to lead with these main things first, and of course also walk the grounds. I just drove 12 hours, 11 hours for my clients who were buying a unit up in Fall Northeast Texas, 88 units, some other 2 acres of land to bid out more places. Great, opportunity for him. High cap rate, 9.2 day of, and then before stabilizing it. So afterwards, probably 12 to 13% cap rate. But if you don't walk the grounds, you have no clue on if the units are good, if you gotta fix things, if they're all outdated electric boxes, if there's something wrong, if there's no upkeep, if the property managers are being overpaid or underpaid. All these things make a big, big role in it. So again, I knew a lot of detail here because most people missed out on half of this, let alone the extra context behind doing underwriting on deals. It's not just paper, because it is a hard asset. So buying sight unseen is not the best strategy. You want to have some kind of boots on the ground as well to make sure it's going to be a solid investment for you or for you, your investors and so forth. And you want extra help, support on any of this. You want to have any feedback on your deals, down below, link in the description, or call me directly. I can walk you through the whole process, helping negotiate as well the best deal. I just saved with my clients over $275,000 on a deal. Another one, we knocked off $1 million. We said, hey, this land asset you have, we don't want it. We just want the storage unit instead. Take the land for yourself. Give it to me for $1 million less. And the land is probably worth $500K. But because we did that, they said okay because they thought it was worth more till we did the comps personally. So you want to actually help them that again, call me directly, no obligations. But I'd love to help you get the best transactions of this buying or selling. But on that point, you want to know all the different numbers. And then when you're looking at your underwriting, the way you want to kind of break this down, again, I have a whole video that kind of breaks down NOI and stuff, but super quickly, the whole goal is to find our NOI. So if I do NOI over here, and then I do gross minus expenses, this equals my NOI. And my NOI, I'm going to say it's just $1 million property, and my NOI is $100,000. that means that my cap rate is 10%. This is a great deal. Most investors are looking between 6 minimum. Some of them are 5. It's like I just want something to park my money at, hold it there. So again, when you're buying assets like commercial real estate, it's not just the cap rate. You're also buying for appreciation. You're buying for debt pay down. You're buying for taxes. All these things play a massive role into your investment. So maybe your return is like 5% cap rate, but you're making 10%, 6%, 20% appreciation rate year on year in, plus they're paying down your mortgage for you. All these things are a big part of your ROI and cash on cash returns and so forth. In the past 150 years, real estate has beat out every investment vehicle out there. Stock markets, gold, you name it. Real estate wins on the long horizon based on long-term investment. Now, for that caveat aside, this is our cap rate. In this example, this is how you underwrite a deal. I'm going to find all the expenses, minus the gross, DONOI, find our cap rate, and also plan to see what is the opportunity for building. How can we stabilize it? What are market rents? So doing a CMA is also part of that. And the CMA should be for land. It should be for rates. It should be for buy right. So I want to know what rates it can do. If it's for apartment complexes, if it's storage units, same exact scenario. If it's another one that's sold down the street or down the way for half off this price, I'm going to use that as my comps. If it is a land value, okay, the land by itself is worth this much, or the zoning is this much, or the permitting can cost me this much to do this, all these things play a massive role. And I see this done wrong all the time. So this is going to be how to underwrite a transaction in Austin, Texas, or beyond, anywhere in America. And we can help you in all 50 states and 25 countries. And now I'm going to show you how to actually do this in live time on a random deal. So really, I won't know any context about it and really show you what we can expect. So let's kind of come over here. I'm going to go to a platform like CREXI, a random transaction, and then let you see my screen. So let's do a CREXI, LoopNet, all these platforms are pretty good. We can do multifamily, we can do a storage units, we can do all kinds of things. For those who are brand new, I would say that storage units are pretty the easiest one to kind of like do a breakdown of. Also, while you walk the ground, you can see as well, okay, it says this 80% occupied, but like I see there's only 10 lots out of 100 units. They lied to us. Again, that happens a lot. Never trust the word of the person. So, apartment buildings. Let's do Austin, Texas. Probably won't have any though, but Austin isn't having a whole lot at the moment. Oh, look at that. It was actually more than I thought. All unpriced though. I'm gonna find this price. So here's a good example. This is in South Austin. It is a 5.5% cap rate, 24 units. So it's actually pretty small, $2.5 million. It's a great example. Let's see if we have an OM though. So this is our OM. A lot of times, they won't have anything there depending on the agent. And so the first few pages is breaking down for those who are totally brand new to this. Austin overview is breaking down the economic impact, employment, all different aspects. A lot of times when you look at the investment overview, they kind of tell you the main points is a assumable loan for $1 million, which is kind of nice. If the rate is 3.57%, cool. That means this $2.5 million deal, I'm gonna have two loans. I'm gonna have one loan for $1 million at 3.5, and a separate loan for that 1.2 after my down payment at the 6-7% rate. So you have to be saving more money. This actually makes the deal even better. So if it's a 5% cap rate as of today, that lets me have a really good example on how much we can net. But maybe on paper it's 5.5, but after my debt coverage, it's actually a 7% because of that low interest rate. So this is another thing about underwriting deals. A lot of agents have no clue that's even a thing, and I'm going to do the math for that. This is a full file location. Up above, a whole breakdown of every single neighborhood in Austin, Texas. It's a 7-hour long video with chapters though. You can kind of pick and choose when you look at. I broke down the whole thing though in live time to show you what pockets for Austin is good. I like 4-5. It's not too far from downtown Austin, so this deal will have a high appreciation rate. This is also really good, close to the highway, which is good and also bittersweet. There are some issues with homeless in that area, but it is still worth checking out. Also, again, while you want to walk the grounds. This is what it looks like. Has some okay-ish parking. This is again an overview. Here's some photos of it. It's been newly remodeled. And then it had amenities and green spaces, property location, market overview, financial overview. So here we are. So we know there's 24 units here. And right now the market rent in the area is $1,050. And they're saying they're doing $9,950, $850, and so forth. Now, what they're missing on this, what I want to know is like, what are the sizes for each unit? Are they all the same size? Why are they paying $800 and this guy paying almost $1,000? Because these are obviously all the same rates, meaning they should be all the same sizes. So you want to know what's happening in them. You can see here as well, vacant, vacant. Here's more examples down below. And when we're doing this, I can see that it is 1765 is our total gross income on these 24 units that they have. Maximum, if it's totally occupied, is $25,000. Meaning when it's stabilized, you never aim for the highest amount. You should always expect to see an 80 to 90% occupancy rate year on year in. So I would actually not use this max number, maybe $20,000, maybe $22,000 maximum. What I would tell my clients to do just to be safe. I want to plan for the worst. I'd rather them lose a deal that could be great, but it's not guaranteed, versus that instead. So on our map here, let's say it's 20K stabilized. So we're going to do the math for both of these. So let's say on map film, stabilized is 20K a month. This is $240K a year. Right now, it is bringing 17,615. Supposedly, again, when we were doing our LOI, NDAs, underwriting and so forth, I'm gonna see a breakdown of all the leases. I want to see if there's any evictions, late notices that I have to pick up on, if they settle themselves into their own concessions prior to closings. All these things makes a massive difference. So at 17,615, that is 211 and 380. I'm gonna round down again. This will be super easy here. 17K a month equals 211. So our gross income is at 211. Now let's see if there are any expenses here. And of course, there's not. So there's no expenses here. So right now, we have no clue if there are any opportunity for us to really do much. Right now, they say for value opportunities, the assumptions for more parking areas, covered spaces. If I do call it spaces over here, expenses $35,000, but I could add like a 9K or 6K. Now, if my client, I'm going to do this, I don't even know. And also on this point too, that the Wi-Fi, Here's the bulk coverage. Right now, you can add this to be not 22K annually. Now, that's not always the case. Sometimes they will say they're doing it, but actually not doing it, or like it's not part of the agreement, even though they're doing it, they're just paying for themselves. All these things, again, will have a big role in what it does for you and your bottom line. But I don't want to add most of these. I'm going to see my client first, what he says, and kind of see if that's actually an opportunity for them. We see our comps over here for market rents. Of course, not showing us what is the sell rates for our comps. And of course, there also is no expenses. Now, this is a pretty small one. I can probably expect to see maybe $10,000 to $30,000, probably $20,000 to $30,000 in expenses. And let's say they pay their property managers $2K a month times 12 is $24K right there. So let's say 30 to 40K. And again, I won't know this number exactly, but for my easy math film, I'm not going to go super extreme and say for all the expenses, for the taxes, and for the maintenance and other things that I deal with, let's say it's $60,000 for the whole entire thing. So expenses is 60K, 60K. That means that my NOI after all of this, after stabilize, is 180K before even planning for my value add. So again, for the value add, I'm gonna have to count in these expenses of this $35,000, how much it's gonna cost my valet. Of course, it says added annual fee, but if that is such an easy add-on, why don't I do it right now? If we're stopping them right now from doing these three main things, that could be easy to do. Same for rent prices. If I say, okay, right now you guys are losing out on a couple $100 a month per one, like how easy is it to do? Because again, you should probably expect to see a drop off. When you buy a property, I actually will expect to see people leave because of new management, higher rates, and so forth. So actually, my example here, I'm gonna change my NOI, or my gross income, on my stabilized rate to 200K. Again, most people, when they're underwriting transactions, they're trying to make it like all rainbows and butterflies. Don't do that. Like, plan for the worst. Like, if it's better, great. If you lose a deal, oh well. You'll find new ones that's even better for you. If you have high risk tolerance, by all means, do it. But at the same time, I want to make sure my clients are getting grand slam deals and have no way of losing money. Because for me, I want to be the best agent for them and also have a long-term relationship with them as well to make sure we're working together for the long haul. So let's say $200,000. That means that my NOI in this case is 140. And in this case over here, it's 240. We'll leave it the same. My expenses that is 180 now. So it's a 40K difference. And then let's find out again the cost of this property is 2.5. So I'm gonna do 2.5 mil, 2.5 mil. And then if we do our 140 divided by 2.5, that means that our NOI, he actually was spot on that example, is a 5.6% cap rate. And that also means that my estimate of 60K is probably pretty close to the ballpark. And I also took off 11K. It's probably actually 70K in expenses. So in that example, that means that it's actually probably closer to a 5% cap rate because that 11K is still there, but on his numbers it's not there. And then if it's stabilized on a worst case scenario, just fixing management, adding more tenants, and fixing pricing, this means that our NOI in this example is 180 divided by 2.5. And now we have a 7.2% cap rate, which is not a grand slam deal. Like this number here, I'm not super excited. My client's probably not super excited. Most of them, 7 to 10 is good. 10 and higher, amazing. 12 to 15, yeah, rockstar transaction on your hands. But again, this is before I do any more stabilizing, before I add in extra amenities, extra stuff, extra, events to make them happier, to pay more money, all these different things. As of today, it's $5.6 million. Now, this does not mean it's a dead deal. So a lot of times people say, oh, this deal's only 5.6, I'm going to walk by because I don't want it anymore. But when it comes to negotiations, if I run comps, so let's have to go back over here. Let's go back to my screen and let's show you what are the comps in the area. So just because that transaction is at 2.5 doesn't mean, one, no investor pays full price for anything. And a lot of times they know that. So they also actually will overprice properties, hoping that someone comes by and says, hey, let's get this lower than it was. And it's been on the market now for 60 days. So 2 months on the market. So we have some wiggle room. If it's a super grand slam deal, even in commercial real estate, it goes pretty quickly if it is a rockstar transaction. So let's show you my screen. Come over here. I'm going to find all of the multi-family apartment complexes in this area. Let's do a 1 mile radius. Obviously, I like to do less than a mile, but there won't be too many of these past 190 days. Oops. So there's no options here. So 2 miles, same exact thing. The multifamily as well. Because the multifamily has to be bigger than 1 unit. So here's some options here. There's some ranges from $750 all the way up to $5 million. One on the contract, multifamily. This one is the 4 area code. Actually saw this one not that long ago. So this one was too small. This one obviously is not comparable by any means. This one's a little bit bigger. Also kind of the same scenario. Not super comparable. So let's kind of see if you can find, this is the one we have right now that we're looking at for $2.5 million. 24 units. No more supporting docs though. This is $4.2 million. There's 4 condos. And sometimes you won't find anything. So that happens, pretty often. I'm at the CREXI. If I see any homes over here, it is also multifamily. That is in the area, but not too far away. This is at 1.1, 1.6. 3 days in the market. 14 units, but half the size. So right now I can kind of see that 2.5 may actually work. Now it comes down to what is the goal of your investment. Are you trying to buy a 5 cap, a 6 cap, 8 cap, 10 cap? That will then determine what your buy box is. So in this example, not a whole lot of comps. Obviously, we'll do deeper dives like CoStar and so forth, kind of see exactly what's actually happening here. But in a super quick search, this is what I'm doing. I'm going to see what's happening. I'm going to talk to my other agent friends too. Hey, saw anything off market lately? But again, it's not a comp as well. Off market transactions that my friends and my agents, my team are doing. Ask them for those comps as well. But now let's say that your goal is to get a 8 cap. 8 cap is pretty solid. That means that your DSCR will probably be at least 1.25 or higher, so you're now being covered by the monthly income. And also keep in mind too that your NOI and all this stuff does not account for the profit. And I'll more on that pretty soon at the end of this video, but this is going to be our first criteria. Make sure this actually works for us on paper And then once we get that number, we have to fine tune it more in terms of what your cash flow goals are. Let's say that my goal is to have 8 cap, which is probably 2.3, 140. So 140 divided by $2.3 million is a 6 cap, so that's not even low enough. So let's do 2.1, 6. So that means that it has to be like a 1.5, which they probably won't do. 1.7. So 1.7 is our number we have to hit to get 8 cap. So this is my math. I'm dividing my gross income by the purchase price of the property. So for us to get an 8 cap, 140 divided by 1.7 equals 8.2% cap rate. It also means that our stabilized rate now had just passed above 11%. And now this is like a super great deal. And let's do this actually math on this one too. 180, this stabilizes the rent before anything else. Probably 200K honestly per year of a NOI after all is said and done. Divided by 1.7 will give us a 10.5. And this, to me, is a good deal. So even though it may be market value on paper, a $2.5 million deal, but it's been 60 days, that means that most investors right now are probably getting 1.7 is those numbers. Maybe 1.8, 1.9, 2 million to get their 7%, 8% cap rate on day one and reduce the risk. Now, when you do negotiations, obviously, I'm not going to say, hey, Tyler, in this example, tell your apartment complex, why are you selling, what's going on, can I see more financials, do you have expenses, do you have a T12 for the 12-month rolling period? I want to know all this information. I want to know tax returns, I want to know why they're selling, what's the building, I'm going to see every single unit except before. I want to have a complete breakdown of this complex before we even do too much work. Obviously, to see it, I have to have a LOI now to them and agreed on, and a PSA afterwards, a formal contract. But I want to know at least the financials up front in this buyer's market, especially here in Austin, before we do too much of our legwork. Then from there, I can now make an informed decision and say, okay, for us to make this work at 1.7, I'm going to offer you 1.3, 1.4. I know they're going to say no to this number as well. I'd rather anchor them super, super low and be mad at me and say, okay, I can't do that, but how about we do 1.7, 1.8, and get as close as I can to this number over here. And then after all this said and done, let's break it off this one because we don't need it. I then want to know what is our cash flow on this property. Because right now, I'm going to say, I know on day one, I'm making 140K. I'm going to bust out my calculator that I have for closing costs that we use. That allows me to see if I put down 1.7, that is my goal, and a 20% down, for a 7% interest rate here in Austin. And I'm making the seller pay for closing costs for my fee, hoping you get the best deal. All interest rates, let's see if they have it here, I doubt it. I know this area though, but let's get our exact number. So tax rate is 2% even. And that means that my monthly expenses for P&I, PITI, for property income, once it loads, taxes and insurance, give or take, this would be estimate, at $386 on paper, it's broken down, before concessions and so forth, and almost $13,000 a month. And that means that my cash flow So we have 12,835 a month for PITI. And that gives us 1845. That means for us over here is 154, 140 a year. This is my debt coverage. My debt coverage for everything all said and done. And this is also before we count in any hard expenses. If the roof breaks down, you gotta pay for that. That also takes out of our NOI. And I can't plan for that one. We still have a budget already set aside for anything that might happen to you during your process. Right now, I'm spending $154,000 in my debt coverage. So debt coverage, or debt services, depending on what you call it, is our thing. And my NOI is $140K. So that means that even after all said and done, I'm losing $15K a year after buying this property at 1.7. So at 2.5, it's never gonna sell unless you're having a huge down payment, or if you're having a massive seller finance deal. And again, of course, we're not using right now the $1 million at the 3.57%. That makes a difference. And let's do that too, because we might as well see that same math. So that means that we're financing probably $400,000, and our amount here is at 3.6. So 3.6, we have 5.9K, just about. Let's use this. So $1 million loan is 5.9K a month. If I do this math real fast, that's 70K a year. And then our extra finance amount is only 400K now, because it means we're also financing that amount at 7%. And then, boom, our next amount is $3,000 a month. So 400K is going to be at the 3K a month, so 36K a year. So we have a grand total of $106,000 now. So then you can see there, this is why it's so important to do underwriting the correct way, because you just ran off of that by having that initial $1 million at the 3.6. That destroys our deal left and right. Now we're from 150 to 106. What part can you screen? See, 106 minus 140 leaves us $24,000 in profit a year. So for us at 1.7, you're making $2K a month in net free cash flow, $24K a year, and of course you buy down the rates, you buy down your debt with the tenants in there, your appreciation rate, tax opportunities, and more. And then we had a bad deal become a good deal, as long as we can negotiate $800K off. And this is why you do a complete breakdown of financing, of underwriting, the whole 9 yards. I hope this is helpful for you. This is how you do it super quickly. Obviously, you can also do advanced stuff as well. So what I do sometimes on top of this is one more little quick example. And this is valuable for you guys and gals. Make sure down below hit the like button, subscribe as well. I make new videos every single day about all things commercial real estate here in Austin, Texas, and beyond. I break down residential, luxury, and so much more. So let's do this. Come over here. Go to ChatGPT. I'm gonna double check this. So here we go. You'll make sure you tell what to do. I'm gonna say I want these different things, otherwise it'll be wrong. Give it my offering memorandum. And then it's gonna pump out all this stuff for me. Alright, here's the deal. It's at 2.5, expenses is 70K. That means our growth income is 17K up to 211. Again, same as we had on mine. 141, 140 NOI. Again, check your work. Like, do this for yourself as well. 5.6, you have 5.6 on point. They're going to use also a breakdown of our debt coverage using a 3.57%. So again, I didn't even tell it this, and it also caught it, which is amazing. Sometimes it doesn't do that. So now we're going to see our NOI fully stabilized at $25,000. Again, never do that. So again, this is why you don't want to trust AI fully. So this says that 9.3%. Once it's actually broken down and stabilized, it's 4.28. And then here's the current breakdown: 140, 5.6, 2.6%. That means that today I could buy it, but this breakdown, a net cash flow be. And then it's going to say, okay, if this is exact numbers, 140, stabilized 232, you'll make 7K a month. Now, that math, I think, is completely off because it says all debt services is only $54,000. Now, obviously, as well, some of your taxes and insurance will be already part of your NOI. So, like, that shouldn't be in there anyways. But I also know that, like, all expenses here is, like, non-negligible. So, it's not much of a difference there. 1.587K a year. So don't just use AI as my main point here, but have it be like your backup checker for you. Because I want to see an actual math. Talk to your lender. Like for me, all lenders we work with, they do all this deal for us as well, on top of me doing it for underwriting for us too. It makes sure we have double exposure for us. Because then you can see here, this deal is like a grand slam. And if it really brought in $87,000 a year today, that means it'd be gone in a day. $24,000 is probably more like it with all math here. Because 54K, $7,000 a month and free cash flow. Again, we buy in a single day. So don't just trust this, but again, use it for a rule of thumb. See your NOI, see your cap rate. Get a good idea what's going on and go from there. If this is helpful for you, again, down below, have a call me directly. Walk you through more steps for you find deals, sell deals, hold on yards. If you need any support, no obligations, but you have the option down below. And of course, down below over here, the whole breakdown of more things, investing, how to get into deal flows, how to do analysis, and so much more. Up above, I bring down my extortion we did as well, and how awful some numbers can be when buying property. But again, thanks for watching. The best of yet. I'll see you at the top, and happy to have you here.